Gritaverse. What is going on, Gritaverse? Hey, today I have Yannik Cudjoe-Virgil with me. Um, I'm excited to unpack his story. I was getting to know him a little bit prior to jumping on, and we share Virgil. I mean Yannik. I want to say Virgil, right? Yannik. We share some friends in common. I saw Jason Subafield is on there, right? John Rubino. I don't know if you know John well. I just
Yep.
went on LinkedIn, right? And so I was looking at your background. I'm like, man, I'm fascinated. I can't wait to kind of peel back the onion, put you in the hot seat, and learn more about your story. So thank you for joining me today. I appreciate it.
No, thank you very much. Thanks for having me on the show.
Sure thing, man. So let's start at the beginning, right? I saw that you were NFL professional football player for the
Yep.
Tennessee Titans.
Yep.
Okay. Let's start there, right? That's interesting, right? To me, especially somebody with your background that then moves into real estate. I would love to understand kind of like what that journey looked like. But tell me a little bit about your career. Where did you play in college, and how did you end up at Tennessee Titans? And then how did you decide to get into real estate after all that?
Yeah. Yeah. Definitely. So, grew up in Baltimore City. I'm originally from Trinidad. Came to this country with a bag of clothes and, made it happen. Right. I used to sleep on the floors in like a 3 bedroom, 1 bathroom apartment with like 10 people total in there. So,
Mm,
when it comes to overcoming obstacles, that has pretty much been at every stage of my life. Right. So, background is grew up in Baltimore City, went to the University of Maryland, played football there, walked on at the University of Maryland, earned a scholarship within a semester, got an opportunity to play for the Tennessee Titans, which was an ultimate dream of mine's. The top 1% makes it to the NFL, right? So it's
hmm.
very, very challenging to do so. Unfortunately, had a career-ending knee injury that was very, very unfortunate, right? And I tell people this all the time, whether it's the NFL or whatever that you do, if you tell someone that tomorrow they can no longer pursue what they've been working on for or working at for the last 20 years, anyone would be shocked, right? So for me, it was challenging at first because to have a career-ending injury is devastating. But fortunately, I latched on to websites like Bigger Pockets and books like Rich Dad Poor Dad. And it was very, very timely because the first month within my first off season of the NFL, I spent $20,000 in 1 month and had no idea what I spent it on. Didn't account for it. It was just money coming out of the bank. And we hear
Hmm.
stories all of the time. 70% of athletes go broke within 2 to 3 years of their respective sport, at least within the NFL or the NBA context. So I knew that I did not want to be a part of that statistic. So I latched on to real estate because real estate was the only business that I've personally found to have some of the similar characteristics from a time freedom, from a cash flow freedom that was linked to the NFL. And so fortunately, I stumbled into the world of commercial real estate, and we'll talk about that more in depth. But ever since then, joining, real estate, getting into the space, I absolutely love it, and we encourage professional athletes to do so as well.
That's awesome, man. Let me unpack some of that real fast, right? What kind of knee injury, first and foremost?
Tore my patella tendon, one of the toughest injuries in sports. If you touch your knee, the little tendon in front of your knee, as you know, your audience is listening today, it's a devastating injury. But unfortunately, I had to end my career from that.
I had my ACL reconstructed when I was 16, right? Playing football. I'm a little dude,
Tough
right?
sport.
Yeah,
Tough sport.
tough sport. And then, I ended up wrestling in college. And by the way, you went to Maryland. I went to American University. So um,
Cool.
we don't have a football team, but we wrestled you guys in college, right? You guys are always pretty tough. So loved it. In fact, uh, my assistant coach was a three-time All-American for Maryland, and I credit him to really right. He was the guy that helped me. His name was David Land. He was the guy that helped me believe that I could be successful. Right. You got to surround yourself with top people. So I digress. But yeah, man, ACL very painful to kind of redo.
Yeah.
And then yeah, it's just like you're just not the same. right? When that happens,
Yeah,
not the
it's
same.
challenging.
Okay, tell me what age did you come from Trinidad?
When I was around 10 years old,
Okay, what was that adjustment like?
it was challenging. My mom dropped everything and brought. I'm the only child on her side, so she dropped everything and brought us to this country in search of better opportunity, a better life. Living in a third world country, you don't have access to hot water at times, right? So the little
Hmm.
things that, living in America, you kind of overlook. Some people would be glad to have some of the little luxuries that people have in this country. So came over when I was 10 years old, and ever since then have been purposeful in being able to create a life by design, but then also create wealth and longevity for my family.
Did you start playing football right when you came to the U.S. or like what happened there?
I kind of just fell in love with football from when I was younger, we used to play this game called Kill the Man with the Ball.
Oh
you know,
yeah,
and
of
that's
course.
just that's it's fitting, right, for football, right? The violence of the sport.
Yeah.
So yeah, I played that when I was about 11, 12 years old, and just kind of fell in love with the game, and it's really been truly a blessing ever since.
Okay, and then you went you decided that you were gonna walk on the team, so that's a whole thing there. So you played, I assume, in high school, probably did well, but weren't recruited right out of high school. So this was a dream of yours. Tell me a little bit about that experience.
Yeah, so first, I was what you consider to be a late bloomer. So I had all of the talents. I just needed it to be unlocked. So I started off in Division 2 on a scholarship, a partial scholarship, and quite frankly, we weren't doing well. And
Mhm.
whenever I'm doing something, anyone that knows me, whenever I'm doing something, I'm committed to it. I need everyone on the same page. So I said, man, if I have this dream to go to the NFL, and we're not winning here, but if I am going to lose, I want to be at the top tier school, right? So
Mhm.
I gave up my scholarship to walk on at the University of Maryland, got accepted academically, and quite frankly, balled out. And within a semester, I was able to get that full scholarship, and then it was just up ever since.
Good for you, man. That's awesome. Last question about football, real fast. What year? Like what? Where were you in like your college journey where you blew out your knee? Was it? Not college. You blew it out in the NFL, right? You
Yep,
blew it.
my rookie
Okay,
year.
your
Yep.
rookie year. Your rookie year. Ah, it's the worst. So did you go through a depression? Like what happened with that? Like I would imagine like that. Like you said, you'd spent an incredible amount of time thinking and training and two a days and practice and traveling and and now it comes to an end. Like,
It
what
was
happened?
challenging. It was definitely challenging. I think the mental aspect of sports is something that's coming to the front now as we advance as society. People are able to be brave enough to talk about their feelings and how things in the past have affected them. Mental health in sports is real, right? Because
Mhm.
a lot of times when you're injured, you get isolated. You're in a training room. Coaches make the little slick remarks as they walk by. There's always every seriousness in the joke. And so, when you're getting paid for it, it's different, right? Because now you're on the hot seat. So it was definitely challenging, and really was just relying on faith and doing everything that I could so that if something happened where I wasn't unable to get back on the field, I knew that I, did everything I could to be back on the field. So
Okay.
it's a challenging transition for sure.
Now there was a lot of things you could have transitioned into, right? You probably went through some soul searching a little bit. Like, how did you stumble upon, bigger pockets and rich dad, poor dad, like you said? Like, how did that happen? Somebody put a book in your hand. The mentor whispered in your ear. Like, how did that come about?
Good question. So I don't really remember exactly how it came about, but I knew that I was in search of something, and I think I either fell on Rich Dad Poor Dad first or Bigger Pockets first. I've been injured in my career at different times in college as well, and during those times, I always try to find something that would take my mind off of it. So whether it's picking up a new skill like playing the piano, or trying to start a new side hustle business in college, or
Mm.
picking up a book like Rich Dad Poor Dad, it was just something for me to get my mind off of. But then when I stumble into the world of real estate, I've found all of the potentials and all of the abilities to create wealth and time freedom and generational wealth and all the things that you can have from an impact perspective when you're investing in real estate. I found that it was definitely something that was turning into a new calling for myself. And
Hmm.
by way of that, I met a developer in Nashville, Tennessee. At that time, he was developing offices, and he introduced me to the world of commercial real estate. So I would attribute those, timelines and things that have happened to my growth pattern of getting into the world of real estate.
Okay, so let's talk about kind of that growth and projection in real estate. So here you are, crossroads. You get into real estate, whether it's through Bigger Pockets, Rich Dad Poor Dad. Like your brain starts saying, "Okay, I want to do something. I need to do something different. I need to build a different skill." Um, what kind of commercial real estate was it?
Particularly or specifically multifamily real estate,
Hmm.
because it was something that was easily translatable from the world of residential as opposed to maybe office and
Hmm.
retail. Some of the things translate from residential to multifamily. And I just read upon all of the demand factors and all of the benefits of getting into the world of multifamily, the risk adjusted investment asset class when you get into the world of multifamily. So it was just really easy for me to understand, but I still wanted to learn real estate at a high level. And so I am always on the quest to learn something new every single day. And I found that the best way to learn is by doing, but then also learning from people who you aspire to be like,
Hmm.
right?
Hmm.
Because you kind of get the double benefit from that. You get on one side, you get to learn from people directly, direct access, learning from their mistakes as well. But then also you get to learn by actually doing. So you're not only sitting on the sidelines learning at one point, but you're also in the field getting those mental reps, right? And that essentially helped me jump out about a year ago to doing our full-time investment firm, managing and growing the company's assets.
Okay, let's unpack though the beginning of that. What did you do specifically for this developer right when you got out of college? What were you doing for him
Yeah,
or her?
so it was so after I decided out that I wanted to retire from the NFL, started off in commercial real estate brokerage for KW Commercial, did office and retail tenant rep and also multifamily investment sales. Then from there I moved to a couple of development shops working as an asset manager because I knew that in order to effectively execute on the business plan, that asset management part is extremely important, right? You can acquire the deal, you can raise the money, you can close on it, but if you can't asset manage and effectively execute the business plan, then your investors are going to be upset, right? So
Mhm,
asset
mhm,
management was kind of like my apprenticeship role
mhm.
to learn about the world of commercial real estate by doing, but then also being in the rooms with people who I aspire to be like. And then I leverage that information and that experience to jump out and grow, our own company's assets and grow our business from an
So
investment
let's
management perspective.
so that's interesting. Yes, so let's talk a little bit about that. I mean, you essentially decided to go and venture off on your own, right? That's a big decision, and you did it relatively quickly, right? Walk me through that mental process. How did you know you were ready?
Yeah. So, well, I knew that I was ready by between closing our first deal about a year and a half ago, but then also from just getting the mental reps, right? When you're actually doing something, it gives you the confidence that you can do it. The only difference is now I'm responsible for cutting those checks, right? And I'm responsible for our investors' money. And I think that's one of the best ways to go about it for anyone that's trying to learn about commercial real estate, maybe getting into the space if you're new, and just trying to get that experience is latching on to a mentor, figuring out how can you add value to them, and also try to figure out how can you maybe work for free, right? Because that
Mhm,
experience is really important. Repetition is the mother of all learning. So if you're able to do things on a consistent basis and get that experience, it's only a matter of just a mental block between you doing it for someone else and you doing it on your own. So as I overcame that, that allowed me to get the confidence to jump out and work full time as an investment manager?
Well, when you jump out on your own, there's a lot of competition that's out there, and you've got to figure out where you fit in the world of all that competition. So, how are you navigating that process? What is it that you're currently doing that separates you from some of the other investment managers out there?
Definitely. So I think, from what we do, first we lead with authenticity, right? Because people are generally going to be around folks who they like, know, and trust, right? And that trust part is extremely, extremely important. But I think as you just be authentic about yourself, you attract the people who you want to attract. The second thing is we rely on data-driven investment strategies. So we're not just listening to any little clipping that comes online or comes across our desk, right? Our team is experienced. We've done deals before. We have the track record, and we're able to execute on those acquisitions. I think between those two attributes, but then also the communication standpoint is extremely, extremely important. When someone invests with you, the first and foremost thing that they want to know is that their capital, their principal is protected, right? And so I
Mhm.
think part of that, and as you build the trust process, is the communication aspect, because sometimes deals don't go according to plan, right? But bad news doesn't age well, right? So if you're able to communicate effectively and communicate on time and be transparent, people are generally going to be receptive of that. And at the end of the day, you want your investors to be happy because they are the lifeblood of your business, especially when you're trying to grow your firm and your investment management assets. So that's what separates us as a firm.
Where are you focusing your asset purchases right now? What areas?
Primarily in Baltimore City. We've been exploring other markets. We love
Hmm.
Baltimore City because of the fundamentals, right? When
Hmm.
you get into real estate, what's the first thing that they tell you, right? Look for the ugly house on the best block. Well, if you
Hmm.
look at Baltimore City as it relates to the northeast coast of the country, right? It's essentially the last major city on the East Coast to be redeveloped. And
Hmm.
um, fundamentals basically tells you to look at Baltimore City, right? But so many people get caught up in maybe some of the emotions and some of the red tape that goes in line with investing in Baltimore City. But we see opportunity, and we really love it because of the economy is strong. You have the feds, government jobs, educational jobs, and health jobs as well, that really protects against the economy when it comes to a recession, right? You want to invest in some of those recession resistant jobs. And I think Baltimore City is really on the cusp of redevelopment. It's just a matter of time, right? And we want to be in the market as early as possible so we can reap the most amount of returns for our investors.
Well, my experience dictates that you've got to know your market better than your competition, right? So it's good that that's your backyard, that's where you're spending time, right? Probably have a big network that you've developed there through the years. And I've always said, if you go into Baltimore, right, in Baltimore City, you need a Sherpa, you need a guide because there's landmines there if you don't know those landmines, right?
Absolutely.
Um, and so, what are some of the things that you realized as you can, now that you're doing this and you're like in the trenches, some mistakes that you see other investors making when they enter into that market, right? Um,
Yeah.
because I've seen my fair share of people that have gone into Baltimore and then they walk out of Baltimore limping and wounded, and they're like, I'm never going to go back in. Um, and I always wonder myself, like, you know, I know there's people that are crushing it in Baltimore, right?
Yeah.
So what did they do wrong?
Yeah, I think that there's a lot of things that people can fall into that may be traps within Baltimore City. First, the block by block nature that you mentioned, right? One block might be a good block, the next block might not be the best block. So you
Hmm.
definitely want to make sure that you're on the best block, right? Or in the best market within Baltimore City. That's the first thing. The second thing is just understanding the red tape and the rules that govern Baltimore City and some of the politics that are in Baltimore City, right? It can be very challenging to, for example, get evictions completed, right? There's also potential crime in certain neighborhoods, right? All of the things that some other markets might have. But I think what what gets people in trouble when they invest in Baltimore is they automatically think, hey, this property is worth maybe $5,000. Let me go buy it and it's going to be a good investment, right? Well, the problem is that that property probably was built in 1920s and has a ton of deferred maintenance and issues with it. And if you think you're going to just slap on $5,000 to $10,000 in rehab and call it a day, you're going into a mess. And so, what I tell people who are interested in getting into Baltimore is just first figure out exactly where you want to invest, right? Where are the good areas, so to speak, right? Where are the areas that have less crime, right? Understand the red tape within Baltimore, understand how to go through permits and how to deal with inspections and how to deal with some of the property management issues. Definitely make sure that your property manager understands Baltimore and is able to navigate through Baltimore. And then the third thing, don't just think that you can buy a property for $5,000 and it's just going to be a good investment, right? You have to really go behind the curtains and look behind and do your due diligence and get your inspections and know exactly what you're getting into, because you can lose your shirt, lose your money if you think that something is going to cost $5,000 to repair and it ends up costing 50,000, right? So I think what I'm
Yeah.
trying to convey is that go in eyes wide open because you might miss something underneath the curtain.
Well, let's talk a little bit about that, right? As you're saying that, there's probably a lot of people going, "Wow, that's a lot of work. I don't want to do that. I'd rather find a guide, a Sherpa. I believe in that market. Enter you, enter Yannik, right? Like you've already done that homework. You've already done that research. I'm curious, what's your buy box? Like, what do you look for in the Baltimore market? Because you're not buying little row houses at this stage. You're playing the multifamily game. So,
Yeah.
what are you looking for?
So our buy box essentially is between 20 to 150 units. Ideally, we would like garden style workforce housing apartments. We believe that workforce housing is an extremely demanding product across the country, not just Baltimore City. And we're looking for cash flow. We understand that Baltimore City has historically been a cash flow market. If you're looking for appreciation, that's probably not what you want to look for in Baltimore City. Maybe a DC might be a better market for that. But all of our investors are more so cash flow focused. So if we can find an asset that is, 20 to 150 units, affordable housing because of the demand, we can keep our apartments full and it cash flows very well, then that's a good solid investment for us and our investors. And we're going to hold that property within the 3 to 7 year hold period.
Okay, and yeah, so tell me a little bit about what your plan looks like, right? What kind of return are your investors getting? What kind of internal rate of return are you guys shooting for? What's the exit plan? Are you doing a cash out refi and getting the partners out? Are you selling the assets? Like I'm curious to the model
Yeah.
itself.
Yep. So our, at a base level, our goal is to double our investors' capital in 5 years or less. Right.
Mm,
That's essentially what we try to do. If we can do it within 3 years, that's perfect. If we can do it in 5 years, then that's great. Generally from a cash on cash return perspective, it really varies because interest rates in today's environment, they have a lot to do with cash flow, right? Sellers today are starting to budge a little bit on pricing, and cash flow proceeds are still relatively tight, right? Interest rates have gone up significantly within the past year. So I would say, somewhere between the 7 to 9% range is what our average cash on cash return would be throughout the whole period. And then once we sell the property, that number should average about 20% per year, right? So that's essentially what we try to do for our investors. And our main goal is to provide them with risk adjusted assets, right? As opposed to the stock market where you might put your money in and there's volatility. You're buying a hard asset that reaps cash flow and also the tax benefits as well, which really is one of the best reasons of owning real estate is depreciation, right? Being able to
mhm,
cut down on your other income depending on your tax bracket and your situation. Our investors really love the depreciation from a time value of money perspective, right? They get their money back through, offsetting their taxes and they just kick the can down the road. And that's really how wealth is generated, right? When we talk about strategies like the 1031 exchange, all of the wealthy people in the world know how to kick the kick the can down the road on paying taxes, right?
mhm.
So that's essentially what we do as a company and the returns that we look for.
Um, You started this personally about a year and a half ago. Is that correct?
Yep. So
Okay.
I ventured out last April. We're talking in late March as we speak. April 2022 was when I
Okay.
decided to go full time, and I've been investing in real estate prior to that. I started off flipping houses, but I was doing that just in the in the term of me progressing to where I am today
Sure.
via just the education and the experience in the commercial space that helped me evolve to jump out last year to get into the world of multifamily real estate.
Yeah, there's so much learning that happens, right? And it's such a great way to learn. It's like getting your MBA when you go buy a property and you start, put your money where your mouth is and you go out and try to make a profit on that thing. Um, a lot has changed in the last year when it comes to interest rates. A lot has changed, right? And these commercial loans, like we underwrote some deals that we were underwriting the deal, at the beginning of last year. It was like, interest rate 5%. And now I'm looking to, do my cash out refi and it's like 8.5%. And I'm like,
Yeah.
oh,
And
smack, right?
and
it's
meanwhile, our parents are like, well, 13% was the norm when I was growing up. And I'm just like, well, you can get houses for cheap back then. I don't think houses, prices for homes increased the way that our generation, I'm a millennial, so my generation is experiencing, right? So different times there.
Well, and so what I think this is going to do is this becomes this will be your this will be your phase of learning how to navigate kind of messiness in the market, right? So what are you doing right now as a practitioner to protect yourself, protect your clients? How are you thinking about all of this transition? I'm sure you're thinking about this transition, right? Um, this will be my third weird messiness going into, right? I went through the dot-com bubble and I was in technology, like helping place people in technology. So I felt it. And I went through 2008 as a full-time agent investor. I felt that. And it was pivot. And now we're entering into what we're experiencing right now. And I think we're kind of like in the beginning of that curve. And I'm curious how you think about it.
Yeah, that's a good question. That's a good question. So first and foremost, when I think about cycles, I ultimately understand that every cycle has different onsets, right? There's always something that has created some issue within the cycle that has changed the cycle, right? So when we talk about 2008, we can say that properties were overvalued, right? Because of the boom on debt, right? People were able to buy properties, and a lot of people lost their houses. They were over leveraged, or properties weren't worth what you thought they were. So then we moved to COVID, right? And that was like the issue was like COVID, and people weren't paying the rents, and you were having a rent collection issue, and now you had to figure out how to asset management through that span. Now it's like a debt issue, right? Interest rates have been increasing, and the Fed's trying to curb inflation. So I think, at different points within a cycle, depending on what's going on, I think there's different playbooks that you have to pull out, right? Things that you have to pull out your toolkit, right? So when I look at this particular cycle, I'm looking at interest rates and I'm thinking, wow, man, how can we prevent against, our issues on debt? Right? How can we get into deals that have some sort of fixed rate debt so that we're able to ride through this cycle, and maybe once the interest rate market starts to stabilize, because we can't possibly think that this is going to increase, forever and ever, right? The issue
Yeah.
is that within the past 10 years, rates have really been relatively low for a long period of time, and that has a direct impact on asset values. So I really don't think that we're going to be at a quote unquote high 7% interest rate, for the next 10 years. I think that's going to come down at some point. So right now we're focused on how can we identify cash flowing opportunities, right? Because cash flowing opportunities helps our investors, or helps us get through times of turbulence. We don't know exactly what's going to happen. If there's a recession that's coming, we have no clue, right? I don't have a crystal ball, but I know that cash flow is always done well during times of turbulence and recessions, right? So we're looking for cash flowing opportunities, not necessarily looking at appreciation on the exit. And then also picking up properties at good discounts compared to what we think is actually worth in a stabilized market. We're hearing all of the issues that there's a lot of commercial real estate debt that's coming due, that's being matured within the next 12 to 24 months. So, we're working on a deal right now, actually, that we're able to capitalize on a situation where the seller's got to get out of this deal, and we're getting it at a good price. So now what we're able to do is get it at a good price, cash flow on the property. Once the interest rates come down to a stabilized number, we can capitalize on the interest rate market, get that asset back to what we think it's going to be worth, and we can deliver that 20% on average return to our investors. So I say that to say no two cycles might be the same, but the point is to just have a playbook, right, for each different cycle or different thing that's going to come up in real estate. I think that's just the journey of a real estate investor, investment manager, which, if you own real estate and it's yours, you manage the real estate, right? So you're essentially the asset manager or investment manager for your portfolio. So as investors, our job is to really just be fluid, right? The market is going to be the market, things are going to happen. But if you want to do deals, you have to be able to adapt.
Yeah, I love that. And there's actually you have an advantage having just entered into the space of multifamily. Like I don't want to discount all the stuff that you did prior to, but the advantage is you didn't buy some of these assets 4 or 5 years ago that are now coming due, right? And if some of those asset managers weren't prudent and don't have cash reserves, and now they're looking at what the interest rates look like, um, you're going to have opportunity. You specifically are going to find opportunity in this market because of those assets that are coming due, right? Um, and so you just got to position yourself really well. I mean, I had a good friend of mine that did a lot of burring, right, in the last 7 years, 8 years, and he did extremely well. But over the last few years, and he wasn't getting long-term debt. He was getting 5-year commercial debt, right? It was all ballooning. Um, and so it's all now just changed over, which has crushed his cash flow. And he's like, shoot, right? I'm in
Yeah.
trouble, right? I'm in trouble. I didn't think I would be getting into trouble. I'm going to have to sell. I'm going to be forced to sell some assets, stabilize my portfolio.
Yeah.
And so, as a good asset manager, um, investment advisor, you always have to be thinking kind of like 10-year, 15, 20-year increments. What happens if, right? I would imagine. What happens
Yeah.
if, right?
Yep. Yep. You always have to have a second exit plan as an investor, right? And generally, we love getting into long-term fixed rate debt. If we plan to hold the property for a long time, some people like to get into the floating rate debt, and that has certainly caused a lot of pain within the commercial real estate market today. I think it's just about having the right business plan for the right property, and also having those exit plans and those backup plans, because you just never know when things are going to happen. But generally, if you can get into deals with low long-term fixed debt without some crazy amount of prepayment penalties behind that, then generally you can ride out that storm to the other side and sell whenever the market is in a better place.
Got it. So, one of the things that you and I talked about was your passion for helping athletes build wealth through real estate because you saw what would happen firsthand to a lot of these professional athletes, right? What are the stats? What did you tell me the stats were?
Yeah, the stats. Well, I would say these are old stats, right? So
Okay.
the stat is, within 3 years, 70% of NFL players go broke within 2 to 3 years of leaving their sport, right? But I would honestly say that you probably seen the 30 for 30 broke, right? That was an old ESPN 30 for 30 film when they just talked about all the NFL players that were going broke and spending a lot of money. I honestly think that athletes are positioned to be huge wealth creators for their families for the foreseeable future. And the reason is that entrepreneurship in today's world, today's athletic space has become the sexy aspect
Hmm.
of being an athlete, right? When we take a look at the modern day athlete, we take a look at maybe a Tom Brady or LeBron James, and what do they have in common? They have businesses that they're investing in. They are doing well off of the field. They have brand partnerships and all the things that you're able to leverage with social media. And now athletes are getting a little bit more business oriented and business focused because they have to, because of those off the field partnerships and the investments. And quite frankly, athletes want to be like athletes, right? And they follow each other. So if one person pulls up in a BMW or a Rolls Royce, the next person probably will, right? Back when I was playing in Tennessee, the entire parking lot was a car show, right? So in the professional athlete space, they like to do what the next person likes to do, right? So I think as we continue to follow the trend of it being trendy to be an entrepreneur and athletes being exposed and also having the access to information, because that's another thing, right? Because of social media and technology, the gap is being bridged on information, right? So athletes are connecting with other athletes and having those discussions and partnering, etc. So I say that to say I think the future is bright for professional athletes. The next stage is for us to work with each other, because there's a ton of power that needs to be unlocked and the potential for athletes to invest with each other and also potentially impact their community through real estate as well.
I love that. I see that. Like you just painted a great visual imagery for me, right? Athletes are well positioned to be able to do that. They've become brands, and those brands carry a lot of value, especially if you understand how to monetize them through social media and then think like a business person. You're right. Like it's sexy to be a business person, right? It's no longer, the kind of the stereotypical of when I grew up. It's like, kind of like a stiff, right? type of person, just it's cool to be an entrepreneur. It's cool to be a business owner, um, because there's a lot of freedom that it gives you, right? And I think that as a society, we've realized that, and we've been afforded, like you say, the ability to understand that we can create freedom, economic freedom, through knowledge, specialized knowledge in the world of commercial real estate or residential real estate, or whatever one you decide to go towards, lean towards. Um, Exciting times. So, how are you finding clients, right? Like I know you probably have a whole acquisition team that's out there, right, looking for deals all the time. Um, but you're also getting the message out to potential business owners, potential athletes, that Baltimore City is a place to invest with the right partners. And so I'm curious, like some of the different strategies you're using to attract
Yeah.
investment
So
to you.
capital raising, and attracting your client or that capital for any investment is somewhat challenging, right? I think in the ways that we get our message out, right? Because we like to consider ourselves to be attracting the people who we want to work with and attracting that capital, right? So whether it's just networking, going to different events where our target client or our typical client would be at, a lot of it has been through social media, right?
Sure.
Just getting your message out there, whether it's LinkedIn, Instagram, being consistent, creating a brand for your company, because people are essentially not investing in the deal, they're investing in me, right? They're
Hmm.
investing in our company. They're investing in the fact that we can execute, that we can communicate, that we can do what we say that we can do. And they're able to get a great experience because of that. And so a lot of it is just creating a brand, and that just comes over time through consistency, through thoughtful planning, and all the things that you need to do to just show up, right? Because some people show up, then they leave, and then some people, stick around and then they leave. But it's just showing up every single day and just delivering a message so you can attract the people that you want to attract. And that just goes in line with what I said, when we first started, is that that's essentially just what we do, right? We are we're big on authenticity, and that's what we lead with everything that we put out.
I love that. As you were saying that, kind of the secret sauce to all of it, whether you're an athlete or whether you're a business person, is being consistent. Consistency is the superpower, right? Consistency in living your word, consistency in showing up for practice every day, consistency and not, not missing when you want to miss, like doing it over and over and over again. And you're right. There's so many people that are inconsistent, and if you're inconsistent, it's really hard to build a business, right? People see consistency and they see inconsistency, and if you're consistent, it's going to be easier for you to attract your avatar, right? The person that resonates with you based on your own unique authenticity, um, which is awesome.
Absolutely.
Which is why I love the fact that you're an ex NFL athlete that is helping not only athletes but also business owners, because you're a business owner, right? Like you're a business
Yep.
owner, you were an ex athlete, so you are attracting you, right?
Yep.
Um,
Yep, yep, and that's I keep hitting on this word of authenticity because out there in social media there are a lot of people who are saying things, but they're not backing it up, right? And I think it's difficult to figure out like who's who, and doing your due diligence, which is really important in the world of social media, because anyone could put things out there and you might have this impression that, wow, this person's super successful and this person is has all the bells and whistles checked. But I would encourage anyone that's interested in investing in anyone or in any deal, just do your due diligence, because you just never know who you're partnering up with. But more importantly, you want to make sure that your capital is protected. So
yeah,
anytime that we talk to anyone about co-investing with them or just building relationships, it's a slow process, right? Because we want to see who this person is, how they conduct themselves, and over time a true character reveals itself. So just taking that relationship interest very, very seriously, because we're deploying our investors' capital, and just going with our gut and our due diligence process.
yeah. Wise words. Wise words. Well, in your career so far, right? What is, I'm curious, and maybe you haven't had one, but what has been one of your biggest learned lessons?
That's a good
Right?
question.
One where you're like, oh, I learned a lot in that process, right? I just got schooled. I got my MBA, and I say, the reason why I say you may not have experienced it yet is because, um, you know, you're newer to the journey, right? You've got experience, you got a lot of experience, but I remember I felt like I had a lot of experience until I realized that I didn't have a lot of experience because the market completely changed. But talking to you, I could see that you look into the future. You've got 10 years. So you're way ahead of where I was, because I was just thinking, oh, things are going to stay the same. But have you experienced anything like that so far? I guess COVID
Um,
was a big one, right? Like COVID was
yeah,
big.
yeah, I think I think that was definitely a big one. I'm always I it's always something. I always say, there's always something to learn at any point of time from anyone at any given moment. So I always have the humility to know that I'm always in learning mode, but the confidence to know that I can do something that I put my mind to.
Mm,
So from the market perspective, we're always adapting and we're always learning and we're always trying to get educated and just expand ourselves. I would say one of the things that I am going through or working through is, because of the professional athlete's mentality of like I can do it all by myself. That was the one thing that for the first 3 to 4 years of my real estate journey hindered me from making progress within my business, right?
mm,
Because I always thought that, because I can do it, I should be the one doing that. When in actuality, as a business owner, as the leader of your company, you have to figure out where your time is most valued at, in what role, right? And just because someone else might not be able to do it as good as you, or as good as you think that you can do, you're probably not the best one for that role. So if they can do it just as 80% good compared to what you think that you can do, then that's okay. Then that's okay, because you can't do everything all at once at the same time and expect to grow your company, right? So for
yeah.
example, you know, I used to spend a ton of time in Home Depot picking out materials, right? That takes a ton of time for someone who's, if anyone who's in the world of real estate and knows how to, GC a project and go through the entire cycle, just selecting items from Home Depot takes a ton of time. Well, now we're working on outsourcing that. We're outsourcing that to a construction manager or an operations admin who's able to take some of that off our plate, right? Little things like just answering emails, right? Figuring out how to segment your emails so you're spending more time on tasks that can actually add value to you, right? So I think what I'm trying to convey is that, uh, you know, I've had a lot of in my 5 years of real estate experience, right? I've had a lot of head bumps and twists and turns and also successes. But one of the things that I've found that would allow us to grow at the scale that we want to grow is that we want to make sure that we're working in positions or working in roles that add the best amount of value to the company as a whole, right? So
I love
whether
that.
that's be just like taking things off our plate and outsourcing that to someone else, or having a VA post content, for example, you want to make sure that you are putting yourself in a position to add the most amount of value to your company and grow it in the fashion that you so choose. So that is something that we have learned as we continue to grow into the real estate space.
I love that. What you've just said is you're going from solopreneur, self-employed to business owner, right? And if anybody's ever read the E Myth, they'll see Yannick just kind of described the whole problem of that self-employed, highly paid person that is really good. They're super effective. They can make a ton of money, but they are the chief. They're the dishwasher, they're the cook, they're the waiter, they're the server, they're everything. And you cannot run a restaurant, right, trying to be all things to all people. And you have to discover what your superpower is and then play in your superpower. And by the way, that is the number one place that I see most entrepreneurs, business owners get stuck. And so I'm so glad that you realize that has been the thing, because once you unleash that and you realize I need to focus on what I focus on and and live in my superpower, literally your business just explodes at that point, right? So I'm curious. That brings me to one final question, and then we'll kind of start wrapping it up. What would you say, Yannick, your superpower is?
I would say from an internal perspective, my superpower is tenacity. I think from dealing with some of the things that I've dealt with throughout just my life, from overcoming, the immigration and sleeping on the floor to buy my mom her first house, to overcoming obstacles of, you went to school for kinesiology. I don't think that you can get into the world of real estate and do things at a high level, to giving up my scholarship and walking on at the University of Maryland. I think tenacity is woven in between those timelines at some point. So I think internally I want to say tenacity, and then externally I think just building relationships and
Mm,
talking to people and networking and having those conversations, because
mm,
like you already know, right, your network is your net worth, right? You want to
mhm.
know as many people as possible to add value to, but also you're able to grow your company with as well. So I think those two attributes are definitely my superpower, and to your point, we try to play to our strengths in the best way possible.
I love that. That is so cool. And it means that you also know yourself, which is so cool, right? So, Yannick, is there anything that I haven't asked you that you feel our grid community needs to know?
I think I'm naturally, like, I like to tell myself like I'm an underdog, right? I'm just going to, like, I'm scrappy. When I was playing football, they called me Cujo, like the dog. I just came to the realization actually a couple of months ago that everything is going to be hard, right?
Mm,
Entrepreneurship, it's never linear. It's like the zigzag pattern, right? Some days you're up, it's like I'm on the top of the world, nothing can beat me, and then some days it's like, all right, why did I start this again? Why am I doing what I'm doing? And that's just part of the Mogul Marathon, which is why we created our podcast called the Mogul Marathon Real
Mm.
Estate Podcast, because that's what moguls go through. There's going to be ups and downs, twists and turns, but as long as you continue to stick through and just keep pushing forward, there's no doubt in my mind that anyone that's listening to this podcast can reach any goal that they want to do. They really just have to really just put their head down and just get to work, right? Close those blinds within the 11 inches, which is from ear to ear. Put your head down and just work that you want to achieve. So that's a message that I want to leave with the audience today.
Love hiring athletes because we learn that from an early age in sports, that it's like you're gonna get knocked down along the way. You pick yourself up, you dust yourself off, you say, what did I learn? That's not gonna happen again. They're not gonna get me next time. I'm gonna do better. I'm gonna work out harder. I'm gonna run a little faster. I'm gonna eat a little better. I'm gonna sleep a little bit better, right? It's like that competitive edge that happens, that I really believe that sports in particular train us to be great business people and entrepreneurs. And so if you're an athlete out there, just getting started on this journey, you're already well equipped. You come into this game with lots of skills, right? Nobody could take those skills away from you. And Yannik, if somebody wanted to get a hold of you directly, what's the easiest way that they can reach you? Like, what's, you know, Instagram, Facebook, right?
Yeah.
What is it?
Yeah. So you can definitely look me up on LinkedIn, Yannik Cudjoe-Virgil. We're pretty active on LinkedIn. We have Instagram as well. Our company is called Merlynn Acquisitions. That's MERLYNN acquisitions.com. We have a ton of resources on our website. Whether you're an active investor trying to get into the world of multifamily real estate, we have a due diligence checklist that you can download. Or if you're a passive investor that's looking to diversify that capital from the stock market, we have a syndication guide for passive investors, how to evaluate sponsors and deals. So I'm always trying to, whatever that we put out there and however that we present ourselves, we're always trying to add value in any way possible. So I'm happy to connect with any of your listeners.
Awesome, man. Well, thank you for sharing some time today with us in the Gridiverse on this Grid Investor podcast. I know that we're going to be crossing paths here soon. Thanks, man. I appreciate it.
Thank you so much.